Hello, good evening.
Yes. Hi. How's everyone doing this evening?
Yes, we're so excited to be back once again
Yes.
for our webinar this evening, which is Commercial Loans 101. And of course, we are Kimberly Turner.
And Denise Turner,
And we are
the
the Turner
Turner
team,
team.
realtors who are located in Missouri State, who work nationwide with our top realtor partners. And we specialize in commercial and residential real estate, working with buyers, builders, sellers, and investors. And we are just pleased to have another chance to have a conversation with you, our viewers, to talk about commercial real estate today.
Yes, commercial loans
Yes.
101. So we have quite a bit to cover.
We do. We're going to go through quite a bit. We're going to talk about the loan application process. We'll talk a little bit more about what type of loans you may acquire with a commercial loan. Also touching on SBA. And in addition to that, we'll talk about the role of a lender, a commercial lender. What does your commercial lender do for you? Right? What do you need to know when you have that first interaction with a commercial lender? And you're going to get that firsthand from none other than our special guest, Eric LaFleur, who is Vice President of Commercial Loan Officer with First Mid Bank and Trust. And he's going to walk us through the entire beginning, one-on-one baseline for commercial loans so that when you're ready to start with knowledge.
Yes. So I'm so excited, Kimberly, because there's quite a bit of information here. But as I always say, get your pen and paper. And
And make
Kimberly,
sure you screenshot and or screen record, but watch us on replay. You'll
yes.
also be able to catch us then as well. And take the time now. If you know someone who's been thinking about commercial real estate, share this out. Share our posts, like and follow our Facebook page, subscribe to our YouTube channel, because this is one you don't want to miss. All right, well, hey, listen, without further ado,
Let's
let's
welcome.
welcome none other than our special guest of the evening, Eric LaFleur. Hello, Eric.
Hi,
Well,
Eric.
hello. Thank you for such a wonderful introduction.
Yes, you're awesome. You deserve all the wonderful introduction.
Yes, and we always like to give our guests the opportunity to tell the viewers a little bit about themselves.
That's
So,
right.
would you do us the honor, please?
Who are
Yeah.
you, Eric?
So, again, my name is Eric LaFleur, longtime commercial loan officer. Long story short, I was born and raised in a small town, Oklahoma. Started my collegiate path at the University of Oklahoma. From there, moved to the St. Louis area. I graduated from Lindenwood. Um, right out of college, started my career actually with Enterprise Leasing Company. Got into banking about 5 years after that. Started with U.S. Bank, 7 years there. Bank of America for 4 years. Midwest Bank Center for four. Bancorp South, which is now Cadence Bank, for another 4 years. And just had my 1 year anniversary here with First Mid Bank and Trust.
Oh,
So,
excellent. But you know what? There's something about you that I'm excited for you to share.
Yes.
And that's about your little baseball players and
Yes.
how you coach them. So come on, everybody likes to know a little personal thing about you, and especially what a wonderful thing it is to teach these young children really what to do with baseball,
And it's a
learning
life
all the
lesson.
fundamentals. So just share a little bit of that with us if you would.
it is. It's a privilege for me to be able to coach these kids. I mean, some of the most impactful people in my life were my coaches. So whether it's, the game itself, me personally, I played a lot of sports through high school, one of which was baseball, basketball. I ran track, but football became my number one sport. So that took me all the way through college. a couple of opportunities even after college. But it's nice for me to be able to pass along these things, these life lessons that are learned through sports. There's
Yes.
a lot of discipline that you have to have, a lot of self discipline and a work ethic. And those same things. Not only with sports, but again in life and in school. So we
Yeah.
teach these boys the importance of those things, and take yourself, push yourself to as far as you can, to the best of
Yeah.
your abilities and everything you got, whether it's your home life, school, and sports. So it's nice to be able to do this, and not only to coach this team, but to be able to coach my kids while I'm at it.
Yes.
Your own
Yes.
children. Yes.
I know,
Yes.
and they love it too. Believe me, Eric, because my father coached me, right, and so I still talk about it. The Wizards team, okay, and it is precious to have that bond on the field, right? And I also played baseball, you all, believe it or not,
Yes,
from
she did.
t-ball to hardball, and so those life lessons are so important because it gives people the ability to know what they can do and also to know how to operate even when you're uncomfortable, right? Being able to learn how to just maneuver in spaces that you're not familiar with, and then to be trained and
Yes.
receive the education. And you know what? That's what we're about too when it comes to us as realtors and as a lender. Many of you may have never owned a commercial property before, but that's okay. We're here to be your coach, right? Your
Yeah.
coaches.
Wait a minute. We're gonna take you from first base.
Yes.
You're gonna hit a home run,
All right.
and here we go.
All the way
Let's
home,
get
honey. All the way home to the
let's play
championship.
ball. Let's
Let's
play
play ball.
ball.
So
Okay.
awesome. It's so nice to have you on, Eric, and we're looking forward to this conversation. Listen, if you have any questions, audience, go ahead and put it in the chat box. Towards the end of our conversation, we will be sure to get to those questions. So make sure you stay tuned. And listen, if you hadn't already, register because that's how we, the Turner team, will be able to be in contact with you, but also to connect you with Eric LaFleur, VP Commercial Loan Officer of First Mid Bank and Trust. Let's jump into this conversation. So, Eric, let's talk a little bit about from one-on-one standpoint, right? Our clients come to us and they say, "I'd like to buy a commercial property. What do I need to do?" And one of the first things that we're going to talk to them about is their readiness. Are you prepared to buy a commercial property? And the first question, usually out of our mouth, after we have a little bit of one on one dialogue, is what is your credit score? Right? Because that is important. It's not the only thing, but it's important. Talk a little bit about what you're looking for as a lender.
All right. Well, first of all, thanks again for having me. I truly appreciate the opportunity. But yeah, I mean, one of the first things you're going to be asked about is your credit score. So it's nice for people to know where they stand when they begin this process. So you don't want to waste a whole lot of time gathering documents and filling out forms just to find out, oh, my score isn't high enough and I can't move forward. Right. So, the planning on the front end is really important. Knowing where you stand, what's out there. And I'm sure you've probably shared with people in the past, that you have a right to a copy of your credit bureau periodically, so that way what's out there and it doesn't ding you on your credit bureau.
Right.
So there are things that maybe you need to dispute certain things. There are things that can be removed from your credit bureau, right? But every bank is going to have a minimum score requirement. Some are lower than others. Some will tell you, oh, we need a minimum of a 640. Oh, we need a minimum of a 680. Obviously, the higher score, the better. Right.
Yes.
So
Of
with
course.
anything on the residential side, just like on the commercial side, right? It impacts your interest rate. There are things that you may have to bring to the table to mitigate a low score. So, a national average, you're going to hear a 720, which a 720 is a very good baseline score to have. Obviously, again, the higher the better. But, for us, even as low as a 680, I can still move you through the loan application process with First Mid.
Oh,
Yes.
that's
Yes.
excellent.
Yes.
Okay.
That's
So
really good.
anywhere between the 680 and up.
Correct.
680 and up with First Mid Bacon Trust. Yes. And the preferred score is important for many reasons, right? Eric, talk about why you want to have a 720 or better ideally. What is that going to do for you as a buyer?
Well, it puts you in a better position financially across the board, even personally, because, your score tells lenders a lot about you. And again, I'm sure in previous webinars, I'm sure you've gone over these things, but, the five C's of credit, two really important ones are your character and your capacity, right? So capacity being the ability to repay debt, and the character piece being, are you willing to do so? You have the
Right.
cash to repay your debt, but do you actually do it? Right. So that's the character piece. Um, but those are things that a lender or creditor is going to look at, right? So do you use everything and do you repay it? Do you use it
Right.
accordingly? Do you use it according to the terms of your agreement?
Mhm.
So as a lender, we want to make sure we set you up with the right product on the front end so you don't run into problems like that. So if you have short-term needs, you're looking for lines of credit. Long-term needs, you're looking for loans, right? So it's up to us on the front end and our due diligence to make sure that you're set up properly in the front end so you don't end up with what's in the banking world is called an evergreen. You get a line
Mhm.
of credit that should be used for a short-term need that is maxed out day one and is never paid down, right? So things like
Right.
that. But your credit bureau gives lenders a lot of information, and if the bank should take that type of a risk to move forward with what you're looking for.
So
Yeah.
it's important before you look for a commercial loan, make sure your personal credit information is correct. And that means you have to pay your bills on time, maybe even early, not use too much credit.
Right.
Those are the things that you look for
Right.
when you look at the credit reports. Is
That's
that
right.
so?
That is correct.
Okay.
Yes.
So,
Yes.
just like on as far as someone looking for a home, your debt to income ratio is important. The main difference on the commercial side, though, is the cash flow is more
That's
important on the
right.
commercial than just your score and income when it comes to buying a home. Now there are a lot of different things you have to do to buy a home. So don't get me wrong; it's not that it's
Right.
easy to do one or the other. There's still a lot involved with both, but your score on the front end is highly important, knowing where you stand, so that way when you start the process, you're best positioned to be able to get from start to finish.
From first plate, right? To home run and home to score. Most definitely and win that game. So no, thank you for sharing that, Eric. We want to break it down as much as we can like you are so that those who, this may be their first time ever even thinking about buying, right? They're able to really jump in with us and swim, tread water. Right? And so thank you for that. And thinking about just so you know, everyone, if you're wanting to know more about 5 C's of credit, being able to also prepare yourself to be ready to go and talk to Eric, right? You'd come to us, the Turner Team Realtors, and we would connect you with a free consultant, or we have a paid consultant that we partner with. And either way, they will prepare you to get ready to receive your commercial loan as well as residential. But of course, tonight we're talking about commercial.
Commercial,
So that's all right
commercial.
if you're not there. If you don't have a 720 yet, we'll get you there
Yes.
and better.
Yes.
Okay. And then we will connect you with Eric LaFleur. So make sure that if you're thinking about it, you give the Turner team a call. So jumping in to what residential, right, buyers would utilize as a pre-approval, we're going to talk about how do you get on your road of approval in commercial real estate, right? And what you could equate to a pre-approval would be a term sheet. Talk a little bit about the road to approval starting with a term sheet. What is that, Eric?
So a term sheet is a non-binding document that a lender would provide to a buyer that would just give the seller the peace of mind in knowing they have a serious buyer. It's going to give you the terms and conditions of the loan, whether it's a 3-year fixed rate, 5-year fixed rate, 10-year, 15, the length of the amortization. Um, Most banks aren't going to have what's called a pre-approval like you do when you buy a home. A term sheet is an alternative to that. So that's going to give you a formal expression of the lender's interest in moving forward, all the while giving the buyer some leeway for negotiation.
Yes.
Okay.
Yes.
Well, in order to get to that point, what is required from the buyer? What type of documents, information will the lender ask?
Um, that's pretty standard across the board. When it comes to an application, the documents you're going to need. So being prepared is very helpful. Having a CPA that you're in contact with, so you have your if you don't have access to the documents yourself, you can reach out to them. But we're going to need 3 years of your personal tax returns. We'll need 3 years of your business tax returns. We're going to need a personal financial statement. We'll need balance sheets, profit and loss statements. As far as your company itself, we're going to need your company operating agreement. If you have business partners, maybe it's a separate type of business and you have a partnership agreement. But those are things that we'll need because that's going to tell us what's required from the company, who can sign on behalf of the company, that sort of thing. So having, I'm sorry, go ahead.
No, I mean, to me, that sounds like someone who's already in business. That's what you're saying, having the balance sheet and all that
Correct.
other documents? Yeah.
Speak to also the first time fresh new business owner while you're explaining what a business owner would need, but also once you get through with that, talk about what that first time they've created their LLC
Yeah.
and they're looking to receive a loan, also what they would need.
Yes. That's what.
So for someone new to this, you've got something you've been doing on the side and now you want to turn into a full-fledged business. Having that tax ID number set up, having your state registration set up, and your company operating agreement. Even as a new company, these are things you want to have set up. A business plan, right? Because in most cases, being a new company, a startup business, we're probably going to look at an SBA loan. There are programs that are set for startup businesses through the Small Business Administration, which is the SBA. It's a government-backed loan program. It's set up to bridge shortfalls, whether it's a capital shortfall or collateral shortfall, but it's a program set up for startup companies. So the same documents on the personal side will be needed. We'll still need 3 years of your personal tax returns. And then from there, we do a calculation to make sure that you can support the debt. Since there's no company and company revenue to be added, it's all going to be based on personal income. So your personal income, your expenses, things of that nature. And again, it all comes back to cash flow. Can you support the debt? If you're buying a piece of property, so you're buying an apartment complex,
Mhm.
does that apartment complex by itself cash flow? Do the tenants in that building provide enough income to support the loan that you're going to need to repay?
Right.
So from a documentation standpoint, the personal financial statement, 3 years of the tax returns. Again, to your point, the tax ID number, the state registration, personal financial statement. Those are things we'll still need.
Awesome. Awesome. Thank you.
Yes.
That's good to know
Yeah. So on both
in
sides,
advance, right?
yeah, there's
Correct.
quite a bit of documents and just some extra steps if you're already in business to establish the cash flow of that business to make sure that you
That's
can
right.
handle another loan and make those payments on time.
Right. So, and we do a calculation, because as a lender, right, as a bank, any if someone is already in a hole, we don't want to give you a shovel to dig deeper.
No.
Yeah.
All right. So we're going to do
Yeah.
our due diligence to make sure. And if it's something that doesn't work right now, that's okay. We put a plan in
Mhm.
place to make sure, okay, maybe this property isn't for you right now. There'll be more. But when the next one comes along, you'll be positioned to move forward.
That's right.
Yes,
That's right.
yes,
And
yes.
it's so important to have that up front. right? And it's good for you now to know what to expect. Knowing what you're going to have to present to the lender to receive a commercial loan will help you to prepare, right? Your steps to reach that goal. And so that's why it's so important to share this information with you. So, Eric, talk a little bit about once they receive the term sheet, once we have that, right? What kind of information are the buyers going to find on that term sheet?
Well, it's basically what it sounds like. It's a term sheet. It gives you the terms and conditions of the loan. Um, so you're looking at the here I've got one right here in front of me. So I'm just going to
There
go
you go.
bullet point by bullet. Okay, so it's going to spell out everything, right? So you as the borrower, what type of loan are we looking for? Is it a loan or a line of credit? The loan term, 3, 5, 10, 15-year term. Your interest rate, the payment and term, right? So there are principal and interest, then there's principal plus interest, there's interest only. It'll tell you specifically what it is. The collateral. So to my previous example, right, an apartment complex, that building would be your collateral.
Right.
There's various forms of collateral. So depending on what type of loan you're looking for, um, the guarantors, right? So the borrower, when it comes to a commercial loan, the borrower is going to be your company. The guarantor is going to be you as the person responsible for repaying the debt.
Yes.
So if it's you as an individual, if you've got 3 business partners and everybody's 33 1/3% owner, however that is structured, is where the operating agreement comes into place that I mentioned earlier, because it tells us who is responsible for what and in what capacity.
Yes.
The term sheet will tell you what fees are going to be involved. If you have an origination fee, it'll tell you whether it's 1%, 1/4%, 0.5%, whatever it is. The term sheet's going to tell you what those fees are. If you have any prepayment penalties, the term sheet will tell you whether it's a prepayment penalty or refinance penalty, whatever it may be. It's going to tell you that whether or not it exists, and if so, what those terms are. In some cases, you might have what's called a 3-2-1, where if you pay a loan off in year 1, your prepayment penalty is 3% of the loan amount. Year 2, 2%. Year 3, 1%. Year 4, you can pay it off with no penalty. So it'll spell all those things out in the term sheet. The costs involved, you're going to have title company fees and things of that nature. It'll mention that. The title insurance, flood insurance, depending on the deal, an appraisal will be necessary. Your loan to value is going to be based on contract or the appraised value. In a lot of cases, most banks will take the lower of the two.
Right.
or purchase. A refinance is different, but for a purchase, for first mid, we're going to get an appraisal.
Yes.
Also have a sales contract, but the loan to value is going to be based on that. Surveys, environmental reports, and then any other conditions that may be necessary to meet prior to moving forward towards the next, which would be a commitment letter.
Yes. And before we go to that commitment letter, right? Before we move on to the next one, thank you. That was well laid out, an extensive list of what you can expect, right? Buyers on your term sheet. So before we go, right? The information before we start searching for the property that you're looking for, what terms and conditions are laid out for you in your term sheet. So when you're working with the Turnitin, right? Yes. That's the document that we receive before we start searching, right? So after, if you had any preparation, then we send you to Eric, and Eric is able to collect those documents and the information needed for the application to receive the term sheet. Now you know the price range, right? The fees associated. You know what your interest rate potentially will be, because it's not locked in yet, right, Eric? It's not locked in until a certain point later. once we're under contract. But you know what that range is typical to be. And you also may know the property that you're hoping to purchase. You may have came to us and said, hey, listen, there's a property on the market. I'm interested in buying that property. And if so, then Eric will talk about how that may affect your term sheet, as opposed to you just saying, listen, I'd like to buy some passive income. I'm thinking about a car wash. I'm thinking about a laundromat,
Yeah,
right?
not really sure.
Not sure what you want. So what does that look like to the buyer, Eric?
That's a little bit of a different process, so having a relationship with a lender, I mean, if you already have a bank, maybe it's just for your personal accounts. So the next time you go into the branch, hey, is there a commercial loan officer I can talk to? How does this work? What can I expect? And having an established relationship it's always beneficial, because they're going to be more willing to spend the time, right? Because ultimately we want to be just like the Turner team. We want to be your trusted advisor, right? So you
Yeah.
can come to me with a hypothetical and say, hey, 6 months from now, I'd like to do this. 12 months from now, I'd like to do this. But we can start collecting some information without moving forward with an application. You could bring me your tax returns and a personal financial statement, and I can back into a number and let you know, hey, you can go shopping for a property in this price range.
Oh, that's
Yes.
excellent.
Right.
That's
So
great.
as opposed to, on the residential side, you can get a pre-approval and I can go shop. Right. We can do the same thing. And there's just a little more to it. And, it takes a little bit of time on our behalf, on our side, to go through and back into those numbers for a borrower to where they know what's comfortable and they don't have to go down this path of, oh, I love this building, I want to buy it. And then find out, okay, well, cash flow's not there. Look for something that has a lower sale price. We'll be good on
Yes,
Yes.
it.
yes, yes. And also, are the terms negotiable with the lender? 'Cause there's so many terms. Can the buyer kind of discuss with you, and is it possible to negotiate?
Yeah, absolutely. Because we can look at whether it's a longer amortization to bring down the monthly payment. You want a
Mhm,
shorter amortization to pay it off earlier.
mhm.
So you can have a fixed rate for any length of time. What's going to work best for you? So those things are negotiable. The loan origination fees, in a lot of cases, you'll find that origination fee is at the lender's discretion. The bank policy may say 1% of the loan amount. But in the lending space, there's competition out there. And a lot of times you'll find that lenders are giving you autonomy to reduce an origination fee to go win a deal. We have to compete with other banks. So when it comes to the negotiation part of it, that's what the term sheet is for. So I could send you a term sheet and you look it over and say, hey, can we do something different here or there? Well, absolutely. Let's take a look at it and see what we can do.
Yes,
That's
yes.
great information. Thank you.
We always want to empower you, right? So you know that you can negotiate with your lender. And, to kind of go back just a little, Eric, when you were saying about someone who's just starting out, and they may not have a building in mind, they have a goal in mind. They would like to purchase some type of building that's passive, and they're thinking about maybe a car wash or a laundromat. That example, right? So you're saying to that buyer, it's going to be better for you to go and talk to a bank where maybe you already have accounts open, rather than going to someone that you don't know, or your realtors aren't already in a working relationship with. Is that what you're saying?
I am, yeah, because it's a lot easier to go somewhere where somebody knows you, right?
Yes,
So if you need a favor, you go to a friend. Hey, I need
that's
a
right.
favor, So having a relationship with a bank is very helpful, even if it's on the commercial side, right? So you're still in the process of setting up your LLC. You're still in the process of setting up your operating agreement and putting your business plan together. Open a checking account in that business name. Once you have that
Yes,
tax ID number and you have your state registration, you have a living, breathing entity. Open an account in that entity's name. So then when the time comes, that lender's going to say, oh, hey, well, I see you've been a client of this bank for a year already. Oh,
right,
this is great. So then when it comes to the application process, that's an easy story to tell to someone who doesn't know that borrower. right? So we have
Right.
to go through this whole write-up process, give their background information. And one of those things that we can add to that write-up, this is an existing client of the bank.
Yes, yes. And
You can
so
close
that's for someone who's just starting out,
it. Right.
right? And as well, would you say that same advice to someone who maybe they've been in business for a while, but they're not, they're not sure what business they're going to um, purchase a property for. They don't have a property locked down. Maybe they have had a laundromat, but they don't have a particular location for the new one, for the new location that they're going to purchase? Do they also need to go to someone they already have a relationship with, or that their realtor already has a relationship with, right? Or can they come to you and they don't, well, if they're working with us, we have a relationship with you, but someone, going to another lender who they don't have a relationship with, but they've been in business, but they don't have a property lockdown. Is that the same answer?
It is. I mean, relationships always matter,
Mhm.
So,
Yeah.
to your point, even if they don't have a relationship with me, you do, right? So
Yes.
there's going to be some warm referral there, they get to know you process and the comfort level, right?
Mm-hmm.
So you and I can talk and
Awesome.
say, okay, here's the bank's requirements, and that's information that you can discuss with them before you send them over to me to begin the process.
Yes.
So,
Yes.
I mean, lending in general, as technology advances, things become more hands off, but relationships still matter.
Yeah.
Yeah.
That
The
that
Yeah.
one-on-one
personal.
personal interactions
Yeah.
still matter.
Yes.
That's important.
That's so important.
And so before we jump into conditional approval, because we're talking through right now the approval process, right? And so that term sheet, that's what you want to have before you start searching. It's very important to have it. So when you come to the Turner team, we're going to make sure that you're getting all that information prepared and ready. If you need to open up an account because you're a first time business owner with First Mid Bank and Trust, right? And start showing and building that relationship with Eric LaFleur, and we know we're 6 months out, that's something that we will guide you through, right? As well as preparing your credit and all the things that we discussed earlier. But it's important. We want to stress how important it is to have that term sheet. It's just like, on the other hand, on residential, it's important that you have your pre approval. You can equate the term sheet and the pre approval to the same thing. One's for residential and one's for commercial. So let's jump
Yeah.
in now. So you do all of that before you're under contract, of course, because then we start shopping. We do our part as your realtors to discuss with you what type of property you're looking for, what area, what's your target audience, right? What are you thinking about? Do you have any places in mind? And all of that good stuff that we're going to talk about in another webinar. We want to focus today on the lender's point of view. So once we've done that, we found the property, Eric, right? We've submitted a letter of intent or LOI, and that LOI has been accepted. And now we have the contract drafted. It's been negotiated. It's accepted. We're under contract. What is the next step in that approval time frame that the buyer can expect, right? We're talking about conditional approvals and approvals.
So the same information will be collected and vetted, um, but the conditional approval is going to be more specific. The bank likes the deal, but there may be a few things that need to be addressed. So contingencies, if you will. We can move forward with this, but we need to see X, Y, or Z. Um, the conditional approval is more. Now, let me back up a little bit because I do have some people who will come to me on the front end with a contract already in place. So one thing for borrowers to understand is even though you have a contract in place already, the clock starts for me once I have all of your financial information in hand. Right. So that allows me to go through and do the cash flow spreads to make sure the debt service coverage ratio is correct. So, start to finish, the time's going to vary. You still have to have time for appraisals and things of that nature, which is one of the contingencies when it comes to a conditional approval. Right. So contingent property comes back with a certain value, for example. But it's the conditional approval is more of a green light, knowing you're moving in the right direction towards that final approval.
That sounds great.
Yes.
So, we know what is expected from the buyer. Now, what documents are required from the seller?
Um, Hopefully, there is a good relationship with the seller, because there
Yes.
is some information that we will need from the seller. And a lot of times, the Turner team is who's going to have that relationship. They're going to be your point of contact. You,
Yes.
as the buyer, may very well have, maybe you're a tenant and now you want to own the property. So you have that relationship, right? But historical financial information is what we're going to need from the seller, right? So again, that's going to tell us, does that property cash flow, whether it's the car wash or the laundromat, apartment building, a strip center, whatever it may be, do those tenants provide enough income so you cash flow? That's what it comes down to.
Yes. Yes. And the documents that show that cash flow, right, from the seller are
That's going to be
profit.
right. Your,
Mm-hmm.
your your balance sheet, your profit and loss statement, and the tax
Mm-hmm.
returns. That's going
There
to
you go.
show us year over year how that business is done, right? So, you know, for better or for worse, the bank is now your partner in this,
Mm-hmm.
right? So we're going in on this deal with you.
Yes.
Are we making a good deal,
That's right.
That's
right?
right.
Are you going to go, to a car dealership? You got to go test drive the car to see if you want to buy it first. You're going to look under the hood. You're going to kick the tires, if you will,
Mm-hmm.
right? So that information, the tax returns, the balance sheet, profit and loss statement, that's basically the equivalent of kicking the tires for us, because we're going to see how
That's
that
right.
business performed over the years.
Yeah.
Yes. Yes.
So, in a sense, the bank is protecting the buyer.
Correct.
That's right.
It, it,
That's right.
it's, and that's a good protection.
That's good. You need to know how to read those documents. And guess what? In an upcoming webinar, we're going to talk about how do you actually read those documents, right? That's on May 10th. So make sure you tune in and make sure you watch that. We're going to talk about how do you read those seller documents to evaluate a business that Eric just spoke about. And so, Eric, when we're talking about a conditional approval, to kind of summarize it, right? It is what you would give instead of an approval once that client is already under contract, but either they still need to give you some documentation that you haven't gotten yet, and or there's some risk that is involved in the perception of the bank of the buyer or the buyer's property that they're purchasing, and you need to have a good faith effort, right? The buyer has to show a good faith effort to make that relationship, to mitigate that risk, and or provide the documentation that's needed so that they can then move from a conditional approval up to what we're ultimately looking for, right? An approval.
Correct. Right. So
Okay.
that's what the conditional part is. The bank likes the deal, but there's some things we need to address.
That's right. You just got to address it. And what are some of those examples? And then you might have already touched on it, but give one or two examples of how a buyer, can show a good faith effort to alleviate that risk that's perceived by the bank so that they can move forward.
And be
Um, you
approved.
know, in a lot of cases, it may just be a matter of having more of a relationship than just this real estate transaction. So I have a financial statement that shows you have X number of dollars at another bank down the street. Well, we want to be your bank. I want to be your lender. I don't want to just have this thing, sign a contract, and then I don't see you anymore. Right.
Yeah.
So sometimes it's just a matter of, hey, and a lot of banks will require to have a deposit relationship, not just a loan. And
Mm-hmm.
it'll be in your agreement. Right. So one of those things, one of the conditions could be that your operating account is here with our bank.
Is that like quid pro quo? You do something for me.
Well, no.
No, we can't say it's quid
This
pro
is
quo.
a very,
This-
very
I
heavily
mean,
regulated
it's like
industry, so
if
we
you
can't.
put your money in the bank.
You just gotta, wash one hand and we'll wash the other. That's
No,
all.
no,
No, I'm just joking. Everyone, we're playing.
no. But
No.
no, seriously, when the buyer does that, it shows that they are serious when they deposit with the bank that they're seeking a loan from. And I think that's a great expectation
Yes.
to do that, because this way that's a real relationship.
Right.
It's more
And
than
then,
just asking for a loan.
right.
Yes.
There are other products and services that are important to businesses, right? To help you make more money, save money, run your business more efficiently. There are a lot of different treasury products that are available. Banks have, First Mid, we have our own insurance division, right? So you're going to
Yes.
buy a property. I can have someone call you and talk about your hazard insurance, right? And give you some different options there. Um, Maybe you need a Swift account. Maybe there's so many other things. But as we go through this process, as a lender, I'm going to learn more about your company and how your company operates, and then we can talk about other things that will be of benefit to you.
Yes.
Yes, yes,
Yes.
yes, yes.
So other things I mentioned earlier, collateral, bringing more collateral to the table might be one of those conditions. Um, Whether it's life insurance policy or an investment property that you have. A lot of people don't know that a life insurance policy can be leveraged
Yes.
as collateral.
Oh,
So there are a few different things that, and there are options that, and, we can talk about once we get to that process as your lender, or any lender, regardless of where you go, those are things you can discuss with them.
And that will help you to then be, approved, right? That's
Right.
the goal, to become
Right.
then approved. And so, all the things that we just talked about that you need to give to Eric as a buyer for your term sheet, to know where you stand, right? As a buyer, what's your buying power? What can you
Right.
purchase? That's one.
and the
Number two, right? And the terms of that purchase. Number two, the conditional approval, right? And then we just talked about if there's some risk, how you can alleviate those risks. If there are documents, you need to turn those documents in, and we discuss what those documents are. So now we come to the point where all of that's been done, and now Eric, the buyer, is able to be approved, right? And of course, I think we all understand what approval is, but the short version, so we'll be able to jump into the next session, talk a little bit about once the buyer is approved, what should they expect?
So at that point, me personally, that's when I would get the appraisal ordered. And on the term sheet, it'll tell you the term sheet, the conditional approval. It'll tell you that the appraisal is something that has to be paid for regardless of whether or not the deal closes. So me personally, I wait until I have an approval in hand before ordering an
Yeah,
appraisal. So, depending on the type of property, it could cost you a few $1,000s. So I would rather not have that expense out there and not have a deal go through.
exactly.
Right. So once the approval's in hand, you get the appraisal ordered. In most cases, the appraisal is going to take 3 or 4 weeks. So during that time, we'll start looking towards whether or not we need to have an environmental report taken care of. There's things that we can do while we're waiting for the appraisal to come back. But I know there's another webinar coming up, and I guess we'll be digging deeper into those things. But at that point in time is when we start looking towards closing dates,
Yes,
or title work. If there are any title issues, that gives us time to have those items addressed. If there are any liens that are out there, MSD liens, things of that nature, things that we can get cleared up as we approach the closing date.
approaching closing, right? And so you do all of those things even though you are approved. So, in summary, right, when you receive that approval, you still have contingencies. And that's what Eric is mentioning, right? You have those contingencies of the appraisal, the title, right? If you're going to utilize SBA, which we have another webinar that's specific on SBA that's coming up,
yeah.
right? We'll talk through that entire process. And like Eric mentioned, we have another webinar with Eric where we're going to talk through those contingencies that we're speaking of right now that you will have even though you have an approval. So it's not all done yet. We still have some more work to do, more more legwork, but we are closer to that finish line, right? Closer to that home plate. And so, talking through all of that, I hope that gives a really good idea of what to expect on that road to approval as a buyer of commercial property. And Eric, we want to jump right into the different loan types that there are for commercial real estate. So, talk just briefly about, the in general loan types, but we want to focus specifically on conventional and then SBA.
Well, and that's your loan types. Depending on who you ask, there's C&I loans, there's your conventional real estate loans. But in a nutshell, you're looking at conventional loans where you got like a real estate deal. 80% the bank is going to loan you of the sale price. The SBA loan, where the SBA is going to bridge some sort of a shortfall, be it collateral or cash flow, government-backed loan. Then there's also just cash secured loans, right? So someone has cash on hand, maybe they've got a few investors. You could take their cash and use collateral, put the cash in a CD, lend against that. Over time, that security can be released, and then a lien put in place, and they've got that cash on hand again to secure another property. So those would be the main types, again, outside of the C&I lending, which would be for operating companies.
Yes, yes. Thank you, Eric. And, talk to the point of credit score, down payment, right? Debt to income ratio, right? Or cash flow, rather, for commercial, and savings and leverage when you are speaking of conventional and then SBA. Right. So you have to first be approved for a conventional loan. And then, if you're going to apply for SBA, then you'll be able to do that. But let's just talk to those points, and then we'll have one or two more questions about the loan types, and then we'll move on to our next part of our broadcast.
All right. So as far as debt to income is concerned, that number's changed over the years, but typically you want to have 35% or less of your available debt used. And again, over time that number's come down. It was 50%, 40%, but 35% you're in good shape. 49%, there's some things that you can get cleared up and bring that number down. In a lot of cases, it's just a matter of bringing down credit card debt. When we're talking about conventional lending, the bank
Yes.
is going to they're going to loan you 80% of the sale price. If you
So
have more
20%,
capital, 20% down.
20%
Correct.
down payment.
Correct.
Yes.
Now,
Okay.
if you have the ability to put down 25%, 30%, that puts you in a better position with the bank. The bank's going to say, oh, well, this guy's better positioned. Let's move forward with this. And there's less obstacles in your way because you have a lower loan to value.
Yes.
The SBA is another option, right? So if we know on the front end, we're going to be going the SBA route, we have our approval process, they have theirs. We have to get ours done prior to moving into theirs. But the SBA is an option to where, as a borrower, rather than putting 20% down, you can put as little as 10% down. The SBA absorbs some of that risk.
That's awesome. I want to just take a second there. I hope everyone heard, right? Because not a lot of people know. With SBA, you can just put 10% down payment, right? A 10% down payment when you're buying a commercial property. Keep going, keep going. I just had to reiterate that.
Again, and then we come back to the credit score, right? So again, the higher the better. And then when you mention things to be leveraged, that's just your collateral, right? How much do you have in your realm to leverage against, right? So let's just say you've got a portfolio of residential properties. You've got 10 single family properties, and you can leverage those properties to go buy an apartment building.
Yes.
right? So just different options and different ways that we can structure a loan to get you approved.
That's beautiful. It's just awesome to be able to have that knowledge before you even get started. And listen, if you're thinking about it, give us a call so we can connect you with none other than Eric LaFleur, Vice President, Commercial Loan Officer with First Mid Bank and Trust, and he will just give you so much more information. Eric is wonderful. As you can see, he's very personable and he's an expert in his field, right? And
Yeah.
that's why we love working with Eric. We love working with people who are passionate about teaching and empowering, just like we are, because then teamwork makes the dream work. Okay,
Yes.
so that's awesome, Eric. And talking about SBA, right? So first you get approved with a conventional loan, and we talked about the credit score. We're looking for really a 720 or better, but you can have a 680. We talked about 10%, 20% down payment with a conventional. The debt to income ratio, wanted it to be around 35%. How much savings, right, should someone have if they're looking to buy a commercial property? Of course, it's relative, but give an example.
Yeah, it is relative, and in most cases, you want to have enough in an account to cover at a minimum 6 months of your debt, right? So as a company, if like 2020 COVID hits, so people's operations had to cease. Now there were other government thing, there were the SBA had other loans that you could get, that didn't have to be paid back. But can you cover in the midst of adversity 6 months of your debt? So just
Yes.
as a rule of thumb, so to speak, having enough on hand. So if your revenue stream stopped, you still have enough to support your debt for the next 6 months.
Yes.
It's
And that's not just for a commercial loan. In life in general, one should consider having at least 6 months
in
in
reserves.
reserves to
Yes.
cover, because you never know what can happen. And this way you have time to think and regroup and still stay above water, So
Yes, right. That's
that's
right.
very important.
Because
Very
they did away with the PPP loans, which were very
much.
helpful.
Yes.
A lot
Yes.
of companies benefited from the PPP loans. There were EIDL
Yes.
loans. There were other things that were out there, but for companies that didn't have to use that crutch, it was beneficial for them. Some banks were offering deferments, and the people that didn't need those deferments are the people that, for better or for worse, they were better positioned to get what they wanted, because as a lender, I don't have to explain why they took a PPP loan. I don't have to explain why they had loan deferments, right?
Oh,
They dealt with it and they were well positioned to move forward without those things.
Yes, yes. And so that 6 months reserves, that's if you're getting a conventional loan, which of course you must have in order to get an SBA loan, right? So you still
Let me
need,
clarify, because
go
in all
ahead.
honesty, like we can start down the path of a conventional loan, and if things don't quite match up, if we can't get over the fence with a conventional, we can look to the SBA as an option to still get it done for you. Right.
oh,
So
Yes.
okay.
if as a borrower, if you can qualify conventionally, do it conventionally. If there are any hiccups or any things that we need to mitigate, we can use the SBA as an option to mitigate some of those things and still get you approved. So I
Yes.
want to clarify it. If you can, it's not do a conventional and then go SBA. Because if you can do it conventionally, is in all honesty, the SBA is a great resource, but there are fees involved. The time frame, sometimes it can be
Take a little
lengthy.
longer.
Right, because
Yes.
you have to go through their approval process
Absolutely. Yes.
after you go through
Yeah.
the bank's process. So I just
Yeah.
wanted
Yes. So
What?
clarify
Well,
this though.
yeah.
If you do not, if you cannot be approved for conventional,
Hmm.
right? Then you can just only utilize SBA without going to conventional, because we've always gone the conventional and then also utilize SBA. If someone can't be approved for conventional, can they also alone be approved with SBA?
right, and that's my point, right? So if we start down this path looking for a conventional loan for a piece of property, and during this process find out, okay, well, you don't have enough capital. Okay, oh, well, you don't have enough collateral. Okay, let's look at an SBA loan, right? So it's a tool to be used in conjunction with a conventional loan. If the
In
conventional
conjunction
loan
with.
falls
That's what
short,
that's right.
we had to get an SBA guarantee to get us over the hump.
And that gets you over the hump to receive a conventional loan with SBA,
Well,
not just SBA
at
alone.
that point, we just moved to an SBA loan.
SBA.
Correct.
SBA
Of
alone.
course.
Okay,
Okay.
awesome. Yeah,
Yeah.
I guess we haven't had that issue, which is a good thing, but it's good to know, right? That's why we bring you on, right? We bring the experts in their fields. We are not expert lenders. We are expert realtors, right? And we stay in our lane.
Yeah.
So thank you for saying that, Eric. So there are alternatives without first having to get your conventional loan, and that's really good information. And the last thing we want to talk about with SBA, because you'll be able to tune in with us speaking with an SBA representative to learn more about their products and programs and their, the platform that they have. But talk about, would a buyer go directly to SBA to get a loan, or would they go through a lender, or either or, and which one is better for the buyer?
Well, the buyer does have that option. Um, I personally wouldn't recommend that. There's a lot of things. The SBA has a standard operating procedure that is it's a lot. There are a lot of pages, a lot of policies. So having someone else to be that go between is very helpful. I would recommend going to a lender, and if you can find one, an SBA preferred lender. We have the ability to handle things in house. That way, everything is just a single point of contact. You don't have to try to navigate their operating procedure yourself. I can tell you what documents they're going to need, and we can walk you through that process rather than trying to navigate it on your own.
Yes, and absolutely. Let's see.
Yes,
Do we
jumping
have?
right in. Let's talk
Yes.
about, the
Yes,
loans.
about the loans. Okay. You mentioned fixed rate or ARM with a commercial loan. Could you define? Well, most of us know what fixed rates are.
But still
So just
define
for
it.
you,
Define it for our viewers.
and the ARM
That's
loans.
right.
So fixed rate is just what it sounds like. You have a fixed interest rate for a set period of time, right? And then that could match the amortization. The fixed rate could be shorter than the amortization. Now, the amortization period is the length of time that you have to pay the loan off. So you could have a 10-year fixed rate on a 10-year note. You could have a 5-year fixed rate on a 20-year note. So the 20-year note is your 20-year amortization. So your interest rate is fixed month after month. You know what your payments are going to be month after month for that period of time. An ARM that you mentioned is an adjustable rate mortgage. So you would have, given where interest rates are right now, that in a lot of cases may be the best route to take, because as interest rates come down, your rate comes down with it. Sometimes you'll find what's called a 3-1 ARM, right? So it's fixed for 3 years. After that, it adjusts once a year thereafter. So you have a short fixed rate period, maybe a 15-year amortization, but for the first 3 years of that loan, those payments are fixed. Into year 4, it'll adjust once. Year 5, it'll adjust once. Year 6, and so on. Now you have the option at that point to refinance that, maybe lock it in for another 3 or 5 years. Or you have a 5-1 ARM. Same concept, just a longer fixed rate period. So the rate is fixed for the first 5 years. Year 6, it'll adjust once a year. Year 7, it adjusts once a year. Year 8, and so on. And, as a borrower, if you're comfortable with that, you can let it float, because you will have what's called a Wall Street Journal Prime spread. You will have so let's say right now Prime's at 8%. So let's just say you've got your loan, your spread is 0.25%. So your rate is at 8.25. So that 8.25 would be fixed for 3 years. That 8.25 would be fixed for 5 years. In year 6, let's just say interest rates, so Wall Street Journal Prime, the rate comes down to 6%. your interest rate comes down to 6% plus that quarter of percent. So now, as
Okay.
interest rates go down, instead of an 8.25, you let it drop with prime. Now you're at a 6.25. Rates go down to 4.25. Yours comes down to 4.5. So you
Yes.
have that option as a borrower to let it float with prime, or once that fixed rate period is over, refinance it and lock it in for another set period of time.
Okay, so
Yes.
you have the choice. So if you started out with a fixed rate, you could still refinance if the interest rates go down.
You can. I mean, it's totally up to you. In most cases, you want to make sure if you're going to refinance, you're going to save yourself at least 1% on your interest rate. Make it worth your
Okay.
while.
Hmm.
Because you still have to go through, and there's still costs involved. But you don't want to go through that hassle just to save yourself a quarter of a percent.
Yes, yes.
So again, in most cases, you want to look to save yourself at least 1% on your interest rate.
And the thing is that arms aren't looked at the same when it comes to residential. So that's why you want to know how it is beneficial in the commercial lending world, as opposed to residential, where we had the big fiasco, right, with the adjustable rate mortgages.
Of the
And we
balloons.
don't advocate
Hmm.
typically for arms in the residential realm. But when it comes to commercial, there are some benefits, and so you want to know,
Absolutely.
right? You want to know, how is this beneficial if I utilize an adjustable rate mortgage as opposed to a fixed rate, and what it would look like in the future if the rates were to lower. How would you go about, right, refinancing, and would it make sense, or would it make sense to have an arm instead? And so Eric will talk to you more about that, at the time, if it is something that you're interested in. So thank you for explaining that. And you talked a little bit about the role of the lender. We're on an hour now. We're getting ready to ask any questions that anyone has. So this is your time. Of course, you can write it now in the chat, and we will read it off for Eric to answer. And we're going to be finished here momentarily. So take that time. And if you watch on the replay, also feel free to write in the chat, and or make sure you contact us, and we'll make sure to ask Eric the question or connect you with him. So the lender's role with commercial real estate. You gathered all this information about the buyer, right? And now you take that information and you do a write up and you present it to the committee. But you need to know, right? You need to know who this buyer is, the who, what, when, where, why, how, and all the things, right? The business plan, the bio, all of that you need to know and have that conversation with the buyer. So let's just talk for about a minute or so about that first conversation. What should the buyer expect? We know the documents to expect. We know, the term sheet and the approval process, and we know what type of loans and SBA possibilities and all that great stuff. But when they first call you, what should they expect, on that initial conversation?
Yeah, let's take the fear away and the
Yes.
anxiety. So let us know.
Well, in all honesty, me personally, I've always been a relationship lender. So even your first phone call, there'll be a little bit of a get to know you period. Where you've been, where you want to go, how we're going to get there, what obstacles you're going to face along the way. But I would prefer us sit down. We'll go grab lunch, sit and talk. That way you get to know me as well. Because again, the relationship matters. But when it all comes down to it, I have to be able to tell your story. I have to be able to tell your story to a loan committee full of people who don't know you. So some questions may be uncomfortable, but as your trusted advisor, just like your doctor or you're an attorney or your attorney, your CPA, people that you trust with your information, we have to get to that point because there are going to be questions that come up. Whether it's something that shows up on your tax returns, we have to be able to explain it. Whether there's something that's on your personal financial statement, being able to explain it. Even in a bad situation, maybe there was a bankruptcy. Okay, well, how long ago was that bankruptcy? Why was it there? Right, so we can talk through that and still hopefully be able to move you through the process. But I have to be able to tell your story.
Yes, yes.
Excellent. So it's really still personal, but it all has to do with finances and your business. Your your savings, your checkings, your credit card payments, all of those type of things are being asked about. It's not a personal question. You don't get
You're not
into,
gonna ask, what did
well,
you do in high school at
I
graduation?
don't
You're gonna
know.
find out about, if they've had a bankruptcy.
Yes.
Let's talk about it,
Yeah.
right? Let's find out a little bit more about what happened, right?
Mhm.
If they've had,
Yeah.
right, if you see that the income from the business wasn't that good in 2020 or 2021,
So you
right?
want to know
What happened?
why? Yeah.
What
Was it the
happened?
What?
pandemic, right? What are you doing now to make sure that if something like the pandemic, we're still in it, but the initial pandemic were to happen again, how would you operate your business and still have cash flow?
Mhm.
Exactly.
That's what
Yeah.
what my mother's saying, that you will ask them. So don't
Yeah.
think that Eric's going to ask you about your grandmother, your grandfather, and things like that. He's going to stick to the facts.
Eric did say you might feel uncomfortable, so
Well,
I
and when I say the uncomfortable piece, I mean from a professional standpoint. I mean, when you go see your doctor, there are
yeah.
questions your doctor's going to ask you. You maybe, but that's your doctor, and you trust him.
That's
Yes.
right.
As your lender, as another trusted advisor, we have to get down into the good, the bad, and the ugly.
Yes.
Yes,
Yes.
Yeah,
yes.
but
Well.
And you know what? We're going to say you're not going to be uncomfortable,
Yeah.
right? You're going to be comfortable being uncomfortable, but also hopefully you will have a head start. You'll have a head start because you already know what to expect at
Yes.
that first conversation at lunch with Eric, right? You
Mhm.
already know that he's going to ask about these things. And guess what? As your realtors, we prepare you for that first interview. What
Yeah.
we tell our
Mhm.
clients is that it is an interview from the first time that you talk with your commercial lender.
Yes.
Because unlike residential, commercial lenders do not have to provide financing for you and your business,
Mhm.
right? It has to be that it fits within their structure of their bank. Has to be that the risk is alleviated, right? All the things that we talked about. So you want to put the best foot forward, and
Yes.
we make sure
Yes. First impressions.
is
Just like your mother would say. First impressions count.
That's what's
So.
most important. And so
Mhm.
we help you prepare your business plan, right? We help you to talk through, any financial situations that you may be asked about, so you
Mhm.
can best present and have that information readily available and at the top in front of your mind to present to Eric and a commercial lender, right? So that you
Yes.
can have the best first impression, like our mothers tell us, when you're meeting with Eric for the first time. And guess what? We will likely be there with you. So that's okay. You won't be too nervous because you'll have a
Well,
friendly
it
face.
it
And we
depends. It depends. Unless if we're going to lunch, Eric, then
my mother
you
said it
can
depends
invite
on
me.
if Eric's paying. But no, I'm just playing. But no, yes, no, we are usually there with you unless we have a conflict of time and scheduling. And nonetheless, we make sure we do that warm introduction. And ahead of time now what Eric is going to ask of you. And
Mhm.
so, one
The
of the
kinds
last
of things,
questions, yeah, the
yes.
type of things that
Mhm.
Eric's going to ask you. So, one of the last questions we have, as it relates to, what to expect is, should a buyer look to have financing from a lender who is in close proximity, their branch, right, to the property that they wish to buy? Or does that matter or not matter?
it doesn't matter, to be honest with you. I mean, like First Mid, we've got branches everywhere.
Mhm.
So maybe you live here in St. Louis and you're looking at buying a property, in the surrounding areas. We're still okay. Um, we just have to make sure that one of the two components, the guarantor or the collateral, has to be within our proximity. Um, Other than that, it's just a matter of what's convenient for you. If you're a person who likes to go into the branch, maybe you want to go to the branch down the street from you. With all the technology in the world nowadays, a lot of people have shied away from the brick and mortar and actually going to visit the banks. But as far as where the property you're buying is located, different banks are going to have different criteria. But for me, as long as it's within the bank's footprint,
Mhm.
we'd be okay with that.
Oh,
Awesome.
great. So, Eric, let's talk about time frame. Okay, once the buyer has his documents submitted, let's go for the term sheet. Approximately how long would that take?
Term sheets we can get turned around pretty quick, 3 days, 5 days, just to where I can say, okay, we will be comfortable moving forward with X, Y, or Z. Here's what I would, and again, it's a negotiation piece, right? Here's what we can look to do for you.
Okay. And then the whole transaction
From start to finish,
from
how
start
long?
Start to
arrange.
finish, on average, 4 to 6 weeks, depending on turnaround time for appraisals and things like that. Addressing if there are any title issues. But all in all, start to finish, and again, that clock starts once I have the complete loan packet, all the packet of
That's right.
information that I need. That's when the clock starts.
Okay.
Right. So that gives me time to get you your term sheet. That gives me time to work on getting your write up put into place, pulling credit, getting things in order to go to committee, then get it approved, appraisal, and so on, and on to closing, start to finish, on average 4 to 6 weeks.
Oh, excellent.
Yes,
Excellent.
yes. And you have due diligence. So like you said, and like my mother said, it's just a general time frame. But due diligence is when we do all of those contingencies that we're going to talk about in the next webinar, right? And so that could, just depending on the property that you're buying, it could take anywhere from 30, 60, 90 days due diligence. It just depends. And so, it's 4 to 6 weeks generally.
And that's on the side of the buyer, not the lender.
That's right. On the side of the buyer, it takes more time sometimes for you to be able to complete that contingency period during your due diligence, and therefore it could take longer to close. But the lender only needs about 4 to 6 weeks, right? And that's good information to know. So we I think we covered a lot,
Oh my goodness, I'm exhausted.
Oh, it's
I didn't
awesome,
know.
Eric.
It's awesome. You didn't even take one sip of
I know.
water.
I've been sipping water all evening. You just didn't see it because we were off the camera. But
Well,
no.
I'm impressed.
Yes.
And I'd like Eric to be my lender when I buy my
next commercial property, honey.
Yes, definitely.
Yes.
I'll be
Eric,
happy to do so.
you were phenomenal. We thank you so much for your expertise and taking the time out of your, what is this, Wednesday evening? You could be in, Bible studies or at home or
just relaxing.
Yes. I know your son has a baseball game, right? Baseball, basketball. Baseball game this evening, and you're here with us. So we appreciate you.
Thank you
so much for spending the time with us. And I want everyone to just, congratulate and thank Eric for his time. If you get the chance, Eric LaFleur, and we will connect you with him. He is an excellent lender. And he is with First Mid Bank and Trust. He's the vice president of commercial loan officer. So we do have one question for you, Eric, before we go this evening. And let's pull it up here. So our question, I know, I had a birthday recently. Let's put these glasses on. All right. So from Chris Artist, Chris says, what if it's a small business I desire? Do I receive the same consideration as large corporations?
The simple answer is yes. You look at the statistics, and over 70% of the companies in this country are small businesses, right? So, and again, it's a relationship. Your lender should treat you the same way that he would treat a major corporation. You'll find some lenders will tell you, oh, I'm not going to touch a loan if it's less than $1 million. Oh, I'm not going to touch a loan unless it's more than it's at least $5 million, right? So again, having a relationship with a lender is important because that person is going to want to deal with you. Your success is their success. That's what our jobs are. Our jobs as lenders are, for one, to protect the bank, but lend money. That's our job. To vet a process, do an application. So, yes, in short, you would get the same consideration. You should receive the same consideration as a large company.
Yes. And with
Eric,
yes, you will.
You will. We guarantee it.
That's right. So thank you again. Thank you, Chris, for that really thoughtful question. I know many people probably were thinking the same thing. So We have come to the end of our show tonight.
Yes.
And this has been fun with you, Eric. Of course, we are the Turner team, Kimberly Turner.
And Denise Turner.
We are a mother daughter team who are in the state of Missouri and work nationwide with our top realtor partners. We specialize in commercial and residential real estate, working with buyers, sellers, and investors. We are also advocates, first and foremost, right? And so we are all about making sure that you, our client, and the community are educated and are able to make the best decisions for yourself as it relates to your real estate purchase. I am also a practicing attorney. I specialize in estate planning, and my mother is a business professional with her master's in business administration. Tonight, though, however, we are not giving any legal advice. And we, as you can see, we have on the screen that if you have any questions that would be directed towards another professional, whether it be an attorney, a CPA, or what have you, please be sure to ask that professional those questions, because tonight we are not providing that advice. But as realtors and as lenders, we have provided to you information about commercial loans one-on-one. We went through the approval process, we went through types of loans, what to expect of your lender, right? And the time frames as well, and SBA, commercial, conventional loans, and all the same. We are excited to get this information to you. So when you have questions, you know what to do. Contact the Turner Team Realtors and we will connect you with Eric LaFleur. Thank you again, Eric, and thank you so much to our viewers.
Absolutely. Thanks for having me. I truly appreciate it.
Thank you.
Take care, and we'll see you. Oh, next up, we have our May seminars, which will be on May 10th, where we'll be focusing on commercial real estate again. Stay tuned to our Facebook page at Turner Team Realtors and our YouTube page at The Turner Team Realtors for more information. And on May 20th, we will have another seminar, webinar about residential real estate. And we're bringing back the Turner Team Talk Around Town.
Yes.
And
yes.
that will be on May 24th. So stay tuned. We'll be at Home Sweet Home. We're looking forward to seeing you. Oh, I almost forgot.
What?
The Shredder event.
Oh, yes.
Yes, May 13th. If you have personal documents, business documents, and you're looking to shred them, in a proper manner so that you are providing the quality care to either your personal needs or your business needs to make sure that those documents aren't in the wrong hands, the Turner Team Realtors, as well as First Mid Bank, Eric LaFleur, and other vendors, we are hosting, and they are our co-sponsors for a community shredder event that is free to all. It will be taking place on May 13th, which is a Saturday, from 11 a.m. until 2 p.m. And we are going to be located in Florissant, Missouri at Friendly Temple North's campus, right on Newhalls Ferry. So take a look at our Facebook page for more information. I'm sure that we'll see you there. We'll have free giveaways and a good time with the community.
Yes.
Take care, everyone, and we'll see you next time.
Thanks again, Eric. Take care.
All right. Thank you.
Bye.